All right, crypto fam, buckle up because the market is moving faster than a lightning node. We've got a whirlwind of updates that you absolutely cannot afford to miss. From critical price levels being tested to groundbreaking policy explorations, the digital asset space is absolutely electric right now. Are you ready to dive deep into the news that's shaping the future? Let's get into it. First up, we're talking about Bitcoin's intense battle at crucial support levels. The king of crypto has seen a significant correction, and all eyes are on the $110,000 mark. Is this the floor before another surge, or are we looking at a deeper dive? We've got the analysis that breaks down exactly what's happening and what it means for your portfolio. Then, we shift gears to explore a fascinating development out of Brazil. Imagine a nation considering allocating a significant portion of its national reserves into Bitcoin. We'll unpack the potential implications, the arguments for and against, and what this could signal for global adoption. But that's not all. We're also examining the impact of a major political figure's tenure on the crypto landscape. How have policies and regulatory shifts under this administration affected innovation and the broader digital asset ecosystem? We've got the inside scoop on the wins and the serious concerns. And finally, we're diving into the ongoing debate surrounding a prominent financial commentator's bearish outlook on Bitcoin. Is his skepticism justified, or are the long-term fundamentals telling a completely different story? We'll break down the arguments and give you the insights you need to form your own conclusions. Don't miss a single second of this action-packed episode. Hit that like button, subscribe for all the latest, and ring that notification bell so you never miss an update. Let's go. Bitcoin's precarious position. Bitcoin is currently in a critical phase, testing significant support levels around $110,000 after a sharp decline from its recent high above $124,000. This price action has put the ongoing bull cycle under scrutiny, with market watchers closely observing whether this level can hold as a stable floor. Analysts have pinpointed the $100,000 to $107,000 range as a crucial short-term support zone, a confluence of factors including the short-term holder, realized price, and the 200-day simple moving average. A break below these levels could signal further downside, with attention then turning to the $92,000 to $93,000 region, representing the cost basis for medium-term holders and considered a key defensive line. The recent price drop was significantly influenced by a massive sell-off of approximately 24,000 BTC, valued at over $2.7 billion. This substantial dump triggered a cascade of liquidations, wiping out nearly $1 billion in leveraged long positions and intensifying bearish sentiment. The market has seen Bitcoin fall below the average cost basis of investors who entered during the May-July period, a pattern historically associated with periods of market weakness. Technical indicators are flashing signals of extreme oversold conditions, with the Relative Strength Index, RSI, dipping to 24.45, a level that historically presents buying opportunities for technically minded traders. However, the market structure remains vulnerable, with over 82% of positions currently long, indicating a significant risk of cascading losses if key support levels like $106,212 are breached. Analysts are divided on the immediate future, with some predicting a potential rebound towards $116,600, citing Fibonacci retracement levels as a target, while others foresee a deeper correction, possibly reaching $92,000. The 120-day exponential moving average, EMA, currently around $110,119, is being watched as a dynamic support level. A sustained break below $112,000 has led one prominent analyst to warn that Bitcoin is hanging by a thread, suggesting the potential for a major crash. Conversely, the successful defense of the $110,000 level could empower Bitcoin to reclaim higher price points, potentially retesting resistance around $116,600. Despite the downward pressure, trading volumes have remained robust, indicating continued investor interest even amidst the bearish trend. The Fear and Greed Index currently sits at 48, reflecting neutral market sentiment, meaning that widespread panic selling has not yet taken hold. The high percentage of long positions, however, coupled with the potential for cascading liquidations, creates a volatile environment. The market is at a pivotal moment, where the defense of key technical levels will dictate the short to medium-term price trajectory. But what happens when global economic powers start looking at Bitcoin as a strategic asset? Stay tuned as we explore a nation considering a massive Bitcoin reserve allocation. Brazil's bold Bitcoin reserve play. Bitcoin is navigating a period of significant uncertainty, particularly as it grapples with key support levels around $108,000, with the 20-week exponential moving average, EMA, serving as a critical indicator. This level has historically acted as a dynamic support, and its defense is seen as crucial for the continuation of the current uptrend. If Bitcoin can maintain its position above this threshold, analysts suggest a potential push towards liquidity clusters near $117,000, $118,000, with some even targeting $150,000. However, a decisive break below the 20-week EMA could trigger a deeper correction, potentially retesting the 50-week EMA, which historically marks local bottoms in bull cycles, around $95,300. The market sentiment is also being influenced by seasonal factors, with September traditionally being a weaker month for Bitcoin. Analysts are presenting multiple scenarios, including a period of choppy sideways movement, a sharp rebound potentially triggered by Federal Reserve rate cuts, or a more significant macro-driven pullback that could see prices as low as $75,000. Options data reflects this cautious outlook, with the 25 delta skew for both Bitcoin and Ethereum turning negative, indicating an increased demand for downside protection. The probability of Bitcoin returning to the $100,000 mark by the end of September has risen, according to some analyses. The recent price action has led to the liquidation of approximately $70 million in leveraged long positions on platforms like Binance, following a dip below $111,000. On-chain data reveals aggressive sell-side pressure, particularly from newer investors who are currently holding unrealized losses. In contrast, short-term holders, those holding for 1 to 6 months, remain in profit, suggesting a potential capitulation phase where weaker hands are being flushed out, which could ultimately strengthen the market foundation. Despite these pressures, none of the 30 widely monitored peak indicators have signaled a bearish reversal, a divergence from historical patterns where metrics like the Puell multiple and MVRV Z-score have typically indicated market tops. Adding a significant global dimension to the narrative, Brazil is exploring the groundbreaking possibility of allocating up to 5% of its substantial $344 billion in international reserves into Bitcoin. This initiative, currently under committee review in Congress, aims to diversify the nation's reserves and enhance economic sovereignty. However, the Brazilian Central Bank and the Ministry of Finance have voiced concerns regarding Bitcoin's inherent volatility and its alignment with the traditional objectives of reserve assets. The outcome of this proposal remains uncertain, contingent on broader consensus and regulatory approval. While nations consider new reserve strategies, how are political leaderships impacting the very foundations of crypto innovation? We'll examine the regulatory landscape shaped by a recent presidential term next. Bitcoin president's mixed legacy. Donald Trump's second term as the 47th President of the United States, now over 200 days in, presents a complex picture for the digital asset industry. While the administration has seen some favorable outcomes for prominent industry figures, the environment for developers building privacy-enhancing and non-custodial technologies remains fraught with legal uncertainty and hostility. This period has been marked by a series of legal developments that have both eased and tighten the grip on the crypto space. On the one hand, several high-profile legal cases have seen favorable resolutions. Do Kwon, the founder of Terra Luna, reached a plea agreement, pleading guilty to fewer charges than initially faced. The conviction of Nathan Chastain, former OpenSea product manager, for insider trading was overturned by the Second Circuit. Furthermore, the Securities and Exchange Commission, SEC, dropped its cases against major exchanges Gemini and Coinbase, paused its lawsuit against Binance, and reportedly ended investigations into Consensus, Robinhood, and Uniswap. Tron founder Justin Sun, who faced SEC charges and a DOJ investigation, has also reportedly been seen dining with the president, signaling a potential shift in approach towards certain industry players. Regulatory initiatives like the Genius Act have emerged, intended to provide a framework for stablecoin issuers and potentially positioning the U.S. as a crypto capital. However, this legislation also opens the door to applying the Bank Secrecy Act, mandating anti-money laundering and Know Your Customer (KYC) requirements. The Treasury has sought public comment on applying digital identities to DeFi services, which could require non-custodial providers to verify user credentials. This aligns with an executive order aimed at promoting the responsible growth of digital assets, a term that has translated into proposals for new subcategories within the Bank Secrecy Act for digital assets and a review of mixer regulations to potentially outlaw transactional privacy. However, the narrative for developers of open-source technologies is significantly more concerning. Samurai Wallet developers Kian Rodriguez and William Hill pleaded guilty to conspiracy to operate an unlicensed money-transmitting business, facing federal prison time. Tornado Cash developer Roman Storm was also found guilty of the same offense. These prosecutions occurred despite a memo from the Deputy Attorney General that was intended to stop the DOJ from creating new laws through prosecutions, specifically advising against charging developers for user actions. The memo, however, left broad interpretations, allowing for continued prosecutions based on the transmission of illicit proceeds, creating a hostile environment for non-custodial software development. The verdict against Roman Storm is particularly significant as it sets a persuasive precedent, meaning developers of non-custodial tools could face federal charges at the DOJ's discretion. This situation is further complicated by the potential expansion of the Patriot Act to digital assets, a move that could supersede constitutional protections. As code is speech in the U.S., the administration's focus on responsible growth, coupled with proposals to expand surveillance and control over digital transactions, suggests a future where privacy and decentralization may be significantly curtailed. While regulatory clarity remains elusive for developers, how do prominent financial commentators view Bitcoin's future trajectory? We'll dissect a bearish outlook and contrast it with the underlying fundamentals next. Skiff skepticism versus Bitcoin's fundamentals. Navigating the current market downturn requires a clear understanding of Bitcoin's underlying strengths amidst prevailing volatility and contrasting expert opinions. While prominent figures like Peter Schiff continue to voice strong bearish sentiments, a deeper look at Bitcoin's long-term fundamentals, adoption trends, and technological advancements suggests a more resilient outlook for the digital asset. This analysis aims to provide a contrarian perspective for investors seeking to understand the dynamics at play during market pullbacks. Schiff, a vocal critic of Bitcoin, has consistently predicted its collapse, often comparing it unfavorably to gold and emphasizing its speculative nature. His arguments typically center on Bitcoin's lack of intrinsic value, its susceptibility to regulatory crackdowns, and its potential for extreme price swings. He frequently highlights periods of sharp price declines as evidence of Bitcoin's inherent instability and predicts a return to much lower price levels, often citing historical bubbles as cautionary tales. His outlook is rooted in a traditional understanding of value and a skepticism towards decentralized digital currencies. However, this bearish perspective often overlooks several key factors that contribute to Bitcoin's growing fundamental strength. Firstly, the increasing adoption of Bitcoin by both retail and institutional investors continues to drive demand. Major financial institutions are increasingly offering Bitcoin-related products and services, signaling a growing acceptance within the traditional financial system. This institutional interest not only adds capital to the market, but also lends legitimacy to Bitcoin as an asset class. Secondly, Bitcoin's network effects are continuously strengthening. As more users, developers, and businesses engage with the Bitcoin ecosystem, its utility and value proposition increase. The ongoing development of the Lightning Network, for instance, aims to improve transaction speeds and reduce fees, making Bitcoin more practical for everyday use. Furthermore, Bitcoin's role as a potential hedge against inflation and economic uncertainty, often referred to as digital gold, resonates with a growing segment of investors seeking alternative stores of value. The narrative surrounding Bitcoin is also evolving beyond pure speculation. While volatility remains a characteristic, the asset's resilience through various market cycles and its increasing integration into global financial discussions cannot be ignored. The development of regulatory frameworks, although sometimes challenging, also signals a maturing market. Countries and governments are increasingly engaging with digital assets, exploring their potential benefits and risks, which ultimately contributes to greater clarity and stability. Understanding Bitcoin's current price action requires looking beyond short-term fluctuations and considering the broader context of its adoption, technological development, and its evolving role in the global economy. While bearish forecasts like skiffs serve as a reminder of the risks involved, they may not fully capture the long-term potential and the fundamental shifts occurring within the digital asset space. For investors, discerning between short-term market noise and long-term fundamental growth is crucial for making informed decisions. We've covered price action, international reserve strategies, and political impacts. What's next for the crypto landscape? Join us next time for more breaking news and analysis. And that's a wrap on another action-packed crypto update. We saw Bitcoin facing critical support levels, Brazil exploring a massive Bitcoin reserve, the impact of political leadership on crypto innovation, and a deep dive into a bearish outlook versus fundamental strength. Don't forget to hit that like button, subscribe to Bitcoin Bulletin for more essential insights, and ring the notification bell so you're always in the loop. Follow us on all social platforms for real-time updates and join the conversation. We'll see you in the next one.